Okay traders, welcome back. It's Steve here. It's Wednesday 15th of January 2025. It's evening, or at least London's open, happening at the moment. Just want to touch on another consideration, or at least a trade setup which is quite reliable, and you can have a look at this. I've just done up some considerations here, but which I'll go over in time because it'll take too long just to do it all now. But it's a big figure trade, which is virtually all those double zero figures, so 1.0300. so these are often act like barriers psychologically, as well as other instruments which are standing in the way. So we have a few ideas here which you can have a look at that, but I'll explain a couple here which we've got on the alert for today. We had three looking at. We've got the USD Swiss. So this guy here, we're looking for price to come into the 9100. We've kind of come down, which is a little bit annoying, towards 9110. It would have been nice for it to come deeper. What's best is if it could come out of this consolidation and then into this big figure. And if we go along here, we can see on the hourly chart we've got some reasonable support and resistance levels here, so that's kind of cool. What's not as great is we're still early session, not a big deal, but it's nice to see a bit of the battery being run out before it hits into that level, or when it does hit in it won't have enough power to want to push through, and it could just bounce off. So initially we're looking, it'll depend on the pair, but approximately 10 pips, say, on something like this. Something like the pound USD, we're looking at maybe 12 to 15 pips initially, so we're going to scale out of that. There's a whole trade management process. Again, we'll touch on that as we do more videos, but I'll show you a few of these pairs. We've got the Euro Aussie here, not as nice as this USD Swiss. This was probably the best of the lot today, which and keep in mind, you don't have to take each one. You can just select the ones you really like, the ones that looked the best quality, the sexiest ones, so to speak. This one here is not too bad, not brilliant. If you take that, we'd probably think somewhere around here is probably a better level. But if we're just solely looking at the big figure, then it's already come down to 66.03. So often what you can find is that if it hits close to that, it's virtually null and void, it's over. So again, not ideal. Another one was the New Zealand yen. Can be a bit volatile, this one. Again, this guy came down pretty close, 88.02, just a little while ago, so it's a 60-minute chart. I would have not taken this one, although we've got some good levels here, but what I don't like is this exposed inside leg here. So we're looking for a bit more structure, and it's probably got a highly likelihood that it will actually respond off it, but I really don't like this leg. So I'll still be monitoring. I'll probably take an exercise trade on that just so I can get a feel for it, but I won't be taking it. So obviously it's important to also look at the high time frames just to get a response. Now, you don't have to be going with the trend or whatever that is at the time, whether it's a what is the trend? Are we off a 60-minute or 5-minute? Ultimately, we're only ever looking for a reaction of these key levels. So at this point here, we'd be looking for price to come into maybe 91. You might set a limit there of 91.01. Now, the opening stop, I usually try to at least allow open stop of 20 pips just below the 80 level. You'll find if price does go through there, often it will come back within the range, and then you can make a decision then whether you want to get out with a minimal loss, or just grind the teeth and wait for it to move back up. But so it's pretty rare this is going to get taken out. So it will, but every now and then. So at this point, we're waiting for price to come into this level. Obviously, this low here is going to stand in our way, so we really only have about 8 to 9 pips, so that makes it less appealing. Sometimes what you can do is just wait for price just to come through a little bit. So there's still a fair bit of discretion here. You need to get connected with the pairs, understand their volatility a little bit, and know their behavior. So it's really important to definitely scale out of these things. This is the Kiwi yen again. I mentioned I wasn't going to take it, but it got down to 0.2, and sometimes you need a buffer. You might get in a bit earlier, but you don't want to get in anymore. I kind of have a psychological number there of probably minimum 2, sometimes 3, but pips. But if you did get in here, you can see price again, it's come up into this level. You'd want to be taking something out just before you hit that level there, otherwise you're in a world of pain where price breaks through and then we come back again. So you want to be scaling out. What I would normally do is bring that stop right into maybe here, scale out 50-55% depending on the situation, scale out of that. So we've got a free hit here, and then see what price does. So then if price now starts responding, moves high, maybe it breaks this level, moves up into that little fractal right there, then you might just move that stop up here and then take out more profits along the way. So more on the big figure trades as we go along. There'll be setups most days on these, and it's just going to depend on your time of day, where you are, but here's some of those considerations to look at here. So certain pairs will be less effective during certain market cycles, so careful of the yen pairs. Let's say the yen is selling off aggressively on the USD yen, so we've got a lot of US dollar strength, not much, a lot of selling, let's say, in the yen. Then pairs like the euro yen, Aussie yen, you need to be a little more careful with those particular pairs. So so a bit of common sense needed on all that.